Okay. Hi, everyone. Thank you for joining the GIFT Presents the Future of Finance and a Global Perspective. I am Bowie Lau. I am your host today. I'm also the co-lead of the North Asia chapter of GIFT. So what is GIFT? GIFT stands for Global Impact FinTech Forum. We are the most diverse and inclusive nonprofit fintech forum globally, with members over 60 countries globally across many regions. As a global nonprofit think tank, our members include ecosystem leaders from government regulators, multi-party agency, industry, banks, fintech, and blockchain companies, academia, and also thought leaders. And these forums engage with policymakers and fintech slash blockchain slash digital leaders for knowledge and best practices sharing, community building, and collaboration and ecosystem development. So our goal is to work with various stakeholders to help collectively find solutions to humanity's key challenges by leveraging disruptive technology with a primary focus on innovation for impact and inclusion. So thank you everybody for joining. We have these recording sessions so that everybody can also access to the video afterward. Quick introduction of myself. Bowie based in Hong Kong. I wear a few hats beside the gift role. I'm an investor, so I run a company called MaGEHold. I do a lot of angel investment directly to technology companies. On the other hand, I also invested a venture capital fund called Global Ventures, which is more a tech-focused technology fund. We like to focus on Series A to Series B companies. Beside investment, I also run MaGESpire, which is a tech venture development and education group. I do run the consultancy arm helping companies in terms of business development, market access. And on the other hand, in educational wise, I do a lot of events, mainly to focus to spread the knowledge, which is why I'm involved with GIFT. I think we have a very similar objective. I think knowledge is free, but then knowledge can turn to be a skill set, and skill set definitely can bring you value. It's my privilege and honor today to moderate a great panel on decentralized finance. And I'd like to introduce the panelists today. We have Lika Marome, Financial Technology Department Deputy Director from Bank of Thailand. Welcome. We have Chia Hock, General Secretary and Head a Global Product of GIFT. We also have Hector, the CEO of Digital Enterprises from Trident, and Nicole Nguyen, Head of International Marketing, Tokocrypto, co-founder of KryptoVietnam, and also ExCo members. We also have Bettina Quimson, ICT Committee Chair, Philippine Chamber of Commerce Incorporated, ASEAN chapter of ExCo of GIFT. Welcome. Before we get started, I'd like to ask all the panelists to perhaps get a self-introduction of yourself. Tell us who you are, what you do, and perhaps your role in GIFT, and more importantly, how did you get into the fintech space? Why don't we start with Lika?
Hi, everybody. A very good afternoon. My name is Wijitleka Marome. I've been working with the Bank of Thailand, which is the central bank, for 20 years. And my background is in computer engineering, together with information technology and the financial risk management. And I've joined FinTech department, which is the newest department at the bank, since the beginning for the past 4 years. So my department is taking care of the regulatory sandbox to promote the innovation and also fostering the building of the infrastructure for all the participants. So looking forward for the fruitful session today. Thank you.
Thank you, Lika. And how about Nicole?
Hi, everyone. My name is Nicole. I'm currently leading international marketing at Tokocrypto, an Indonesian-based exchange. I'm also the co-founder of KryptoVietnam, which is a blockchain community and event initiative. So I have been in this blockchain space for the last 6 years, and I'm a member of ExCo GIFT as well. And what I'm passionate most about blockchain is the community power that it brings in so many aspects and so much different, in different ways that, normal and mainstream products cannot really envision. So that's what has been driving me, to be more curious and to be more active in this space. So I'm very glad to be part of the panel today and learn more from the panelists, and you as well, Bowie. Thank you for having me.
Thank you, Nicole. And Bettina?
Good afternoon, I guess. Basically, my whole thought process is going digital in general is the way things are happening right now, especially in the third world countries. This needs to be pushed because that's the only way we can provide inclusion down to the grassroots for development in these countries. And as such, when we first sat and decided to start GIFT, we were 5 people in Singapore 2 years ago. And I'm very happy to say that all the new members, to include yourselves that have joined us, is really making a difference in creating that change that I hope to bring to this country. Thank you.
Thank you, Bettina. And Hock Lai?
Hi everyone, my name is Hock Lai. I'm currently the co-chairman for the Blockchain Association Singapore. Before that, I founded the Singapore FinTech Association. Before I stepped down 2 months back, it has grown to be one of the biggest FinTech associations in the world, with more than 900 corporate members and partnerships in more than 40 countries. Just 2 months back, I joined GIFT Forum as the board secretary. So you can see that I'm quite active in the ecosystem space of FinTech and blockchain. Really looking forward to the discussion later. Thanks.
Absolutely, thank you. And Troy?
Hi, good morning, good afternoon, everybody, wherever you may be in the world. My name is Troy Hector. I'm based in Pretoria, South Africa. I have a FinTech startup called Trident Digital Enterprises. Got into the space about 3 years ago. My background is really in the telecommunications sector. I studied engineering, but did an MBA, and now I'm also focusing on the business side of matters. My specific interest in where FinTech is evolving is specifically around central bank digital currencies, which forms part of my academic research. And I think the topic of decentralized finance, I think, is also very close to my heart as well. We do have a very young burgeoning FinTech sector in South Africa. And with this esteemed panel, I'm hoping that I could take some lessons and perhaps forge some collaboration going forward. So, Bowie, thank you for the opportunity to be part of this session today.
Thank you, Troy. Welcome. So today, almost every aspect of banking, lending, and trading is managed by centralized systems, operated by governing bodies and gatekeepers. Regular consumers need to deal with a raft of financial middlemen to get access to everything from auto loans to mortgages to trading stocks and bonds. In the United States, regulatory bodies like the Federal Research and Securities and Exchange Commission, SEC, set the rules of the world of centralized financial institutions and brokerages, and Congress amends the rules over time. As a result, there are few paths for consumers to access capital and financial services directly. They cannot bypass middlemen like banks, exchanges, and lenders who earn a percentage of every financial and banking transaction as profit. We all have to pay to play. So DeFi challenges the centralized financial system by disempowering middlemen and gatekeepers and empowering everyday people via peer-to-peer exchanges. So decentralized finance is like an unbundling of traditional finance. And DeFi takes the keys element of the work done by banks, exchanges, and insurers today, like lending, borrowing, and trading, and inputs it in the hands of regular people. So obviously DeFi is one of the most powerful trends in the industry in the past 1 to 2 years. Where do you see this going, and how can banking compete? Or can they really compete? Dika, what do you think about it?
Well, for Thailand context, the incumbent players, both banks and non-banks, are really strong and gain a lot of trust. I'm sure that it's not much different from other markets. So as we can see it right now, banks are also disrupting themselves. They spin off to be the subsidiaries, and those subsidiaries are more or less are less regulated comparing to the banks themselves. So they have more room and flexibility to explore the innovations. And also they come and consult with us and would like to test in the sandbox. But we haven't had the project yet because the business models and the services sometimes are quite overlapping with another regulator, which is the SEC in Thailand. The SEC has the decree of the digital assets, which they regulate they don't regulate the issuers, they regulate the intermediaries, including the ICO portal, exchanges, brokers, and dealers on the crypto exchange. So to that extent, we have to work really closely to our peer regulators in order to understand and know the developments, and also not to get the regulations to be the burden, you know, for the industry. That's the really good point, because I'm with all the practitioners here. So yeah, that would be for me now.
Sure, thank you. How about you? What do you think, Bettina, on the same question?
Basically, well, the Philippines right now, looking at everything that's happening, we basically have a whole lot of things that we have done, but things to do as well. Basically, if I may, there's ongoing construction in the building, so you may be hearing a big background of banging relative to that. And in all honesty, could you kindly semi-repeat that question? Because I wasn't able to hear it with all the
Okay. The question is, DeFi is a very powerful trend in the last couple of years, and then where do you see it going? How can banking really compete, or can they really compete?
Well, that's a tough question. Definitely, banking will have a hard time competing because they're still very traditional in their approaches. At least here in the Philippines, although we're trying to catch up. On the other hand, this whole sector is very new, and I think there needs to be more regulations relative to that for us to be able to succeed. Not just succeed, because I think it's like some of that market is already successful, but the problem is there is no control. So when there is no control, that creates in itself a problem in the whole ecosystem. So I believe we need time to provide those regulations.
Sure, thank you. How about you, Troy? You're based in South Africa. Thank you. You're based in South Africa. How do you see it going, and how can really like banking compete?
Yeah, so I'm a very strong proponent of DLT technologies, of digital finance, and also the DeFi process as a whole. South Africa, just for context and background very briefly, we are a very well-structured market for financial services. Our banking sector is very, very strong. It's a very healthy contributor to our overall GDP, and it's respected not only on the continent, but also globally as well. I think it still makes South Africa a potential investment opportunity. However, I would challenge the notion that commercial banks, certainly in our context, is I think in a battle to adopt to the new DeFi, blockchain, fintech type environment. One, they carry a very high fixed cost infrastructure, so whether it's buildings, whether it's property, whether it's infrastructure. And I think they will struggle to adapt to the nimbleness of fintech players that are adopting DeFi in the marketplace. Secondly, they will have some technological challenges. Integrating a technology like DLT or blockchain or CBDC into a standard banking system is not something that a CIO can do overnight. Unlike a fintech player that starts off from a clean slate, the banks have got legacy infrastructure that I think they will battle with. And thirdly, I think, you know, when you're in an environment, and I come from a telco environment where we sat very comfortably making these huge amounts of profits as a monopoly, and it was very, very difficult to adjust when the market opened up. And I think as our market does beginning to open up, and I'm hoping that it'll be along the lines of PSD2 like in Europe, I think our commercial banks will struggle to adapt and compete with the more nimble fintech players in the marketplace. So those are just my brief thoughts at the moment in terms of DeFi in the South African market.
Sure, thank you. My next question goes to Hotline. How will DeFi impact traditional banking from your point of view, or from Singapore perspective? Hotline, are you muted?
Okay, the banking environment in Singapore is quite mature. I don't think there will be much impact, at least not within the next 2 to 3 years. But if you look at the growth of DeFi, right, it grew from 670 million in earlier of 2020 to 15 billion by the end of 2020. And then by year to date, it should be about 80 billion. And the number of user wallets for DeFi is about 1.3 million compared to 100,000 a year ago. So you can see tremendous growth. But if you compare to the total market capitalizations of the crypto market, right, it's still just 5%. And if you compare to a traditional asset market of about $100 trillion, it's really 0.1%. So I don't see DeFi posing an immediate threat to traditional banking. But I do see that some banks started to recruit people who are familiar with DLT and DeFi model. So obviously, banks they are not sitting there. They are also looking at what are the various potential that they could be disrupted. And I think overall it's a good development because this will force the banks to actively looking at how they can improve their product services, making it more accessible, more affordable and better services. So I think overall it's a good development, but I think DeFi still have many years before it can reach a level of maturity. There are still a lot of challenges, whether it's in terms of technology, in terms of regulations, or even in terms of business models. Thanks.
Thank you, Hotline. How about you, Nicole? You're based in Vietnam, but obviously you understand a lot in the South Asia region. What do you think?
I think at the moment, yeah, as Hock mentioned, maybe it's DeFi does not pose any immediate challenge yet. But I think that, let's say, I mean, if we recall back in 2016, I would not be able to imagine, let's say the mainstream media is going to cover Bitcoin, and Bitcoin is going to become like part of the financial asset portfolio of a lot of mainstream funds right now. I mean, back in let's say if we come back to the history of DeFi, actually it just started from 2017 with MaGEHold, for example. And we have experienced a lot of volatility even with 2020, even until now. So people are still wondering whether it's DeFi summer or it's DeFi winter. So, basically still, this is a very premature kind of stage for DeFi just yet. But I think for the banks, I mean, let's say with Vietnam and let's say with Southeast Asia, for example, I can see that the banks right now, especially let's say the big commercial banks, they are inching towards, kind of decentralizing the models a little bit. For example, like in Vietnam as well, we are having more digital banks and more neobanks. They are not really going with the traditional model of, expanding their brick and mortar business, but they're now thinking more about partnership model, about how to bring their business digital and how to recruit more, let's say, international, netizens. So who are more like tech savvy and who can use the products, who are like maybe bring less profit per customer, but who can, be acquired in mass, for example, with a young population and so on. So I think that with the traditional banking, at the moment, I think DeFi is going to be like one of the enablers to make them, to be more flexible with the operational structure, to think more about, like expanding their partnership, not only in the country, but also cross-border, because that's something that DeFi can actually exercise its potentials. And last but not least, I think the innovation is just started. So with DeFi, you might have seen that, of course, at the moment, there are a lot of innovations, but there are a lot of drawbacks as well. We see the flash loans, we see a lot of security breaches, but apparently people are hustling, to get more innovation off the ground. And I think that's something that, the banks have to watch out. And I think, as Lika mentioned, the banks are disrupting themselves. So the innovation is going to come within as well. And I think that's a very healthy, I would say, driver for the market in general.
Absolutely. I do see there's a lot of action happening, and I'm happy to see that because that means they are willing to step out of their comfort zone to embrace the change and experience it. So, absolutely. My next question goes to Troy. From your perspective, how can fintech startup benefit from the DeFi?
Okay, that's a very good question, Bowie. And I think there's a couple of things that one needs to prepare for. One is I think you need to look at the toolbox of technologies that are available in the marketplace. So whether it's digital ledger technology, whether it's blockchain technology, whether it's artificial intelligence, and see how you could craft that into a disruptive business model in the marketplace. And the benefit of being in a fintech space is that you will have the flexibility to start from scratch and effectively craft something very unique and hopefully something very innovative in the marketplace. Secondly, from a fintech point of view, I think your base foundation has to start with a fintech wallet. That effectively is going to be the basis to go to market, and how you expand your service offering will indicate whether you incorporate insurtech, whether you incorporate regtech, whether you incorporate cross-border payments, whether you incorporate loan facilities. I think the scope of services that you can integrate into the wallet via standard APIs, application programmable interfaces, I think is the flexibility that fintech operators do need to provide. The third comment that I'd like to make is that DeFi is premised on blockchain technology, on DLT type technology. But to get a fintech startup, it does not necessarily mean you have to start off with blockchain. Blockchain is merely a tool that the CEO of the company needs to decide in terms of how you can apply that in the marketplace. So the advice that I'm giving some of my colleagues is nobody's going to buy a piece of blockchain from you, but they're going to buy a service that is running on that blockchain. And I think the underlying technology is going to be relevant. So I'm very excited about what the world does hold in terms of DeFi, fintech, DLT, because I think, to Nicole's point, I think there's global opportunities that can certainly be leveraged in this space.
Thank you, Troy. Bettina, what is your view on how can fintech startups benefit from DeFi?
Well, I think given today's technologies, it's basically similar to what Troy himself has stated. The technologies nowadays are providing a quicker move for startups in the fintech business. And I've seen it happen. Again, it's great, but then it has its drawbacks because the ones that start very quickly without deep pockets end up closing, and the people that have used them end up suffering. So I think, again, unfortunately, I'm going to repeat myself, we have to go back to strengthening those regulations, because otherwise a lot of people will end up, unfortunately, losing money. So, but on the flip side, as the millennials currently survive strictly on digital currency, the ability to actually grow this industry is there. We just need to harness that growth to make sure that it stays growing and doesn't end up suffering from companies that don't have enough, basically, or enough, investments in them. So
Sure,
basically, as a whole, I believe, yeah.
Thank you. Nicole, my next question goes to you. What are the benefits does DeFi offer to end consumer?
Yeah, I think this is a great question. So I think actually with the end users, I think there are like the benefits of DeFi come in a two-pronged approach. So let's say first of all, it's going to be about having the product available on a bigger scale, compared with traditional products. So let's say right now, everywhere where you have, let's say, internet. Blockchain does come with the internet. So only when there's a massive shutdown of the global kind of, internet system, then the blockchain is going to stop. But wherever you have, like internet and maybe a device, that's where you can get connected to this whole DeFi kind of space, and you can be connected, be served a lot of these like DeFi products. So I think the number one, it's on a greater scale. And number two, definitely, we have so many more options in the DeFi space compared with traditional products. I do agree with Bettina that, of course, I mean, there are a lot of strengthening on the regulation side that we have to think about. On the other hand, I mean, a lot of the users in this DeFi space and crypto space, they're actually contenders of the traditional centralized system. And actually, you know, they do not come to DeFi for security or, you know, for, let's say, I would say traditional products. So they come here for, let's say, different ways to work up their profits, their capital. So with, let's say, with savings and deposit, I mean, if you feel that if you do not feel secure with your money, that might be in the bank, that might be where, that might be the time where you would go to DeFi. So we have so many, you know, ways to increase the liquidity. So we have liquidity mining, we have staking, a lot of other areas. So this is not just, so right now the traditional, compared with traditional finance in DeFi, there are a lot of ways to play with the liquidity. So it's gonna be cross-border market. It's gonna be about pricing a pool against a group of tokens, a basket of products and assets. So it does not constrain in terms of, let's say, the assets that you're talking about, or let's say it does not constrain within a country. So right now, I would say that there are a lot of these products. I mean, we can talk about automated market making, we can talk about liquidity mining, flash loans, a lot of things you can do with the code, you know, with the internet. And so I think that there are more options. So let's say, coming back to the first question, are we going to compete with the bank? I would say we are giving more options to the users instead of competing with the banks, because definitely at the moment there are different there's a huge divergence between the users of, let's say, DeFi and the users of traditional, you know, let's say banks. And time will tell, you know, when they come together and when we can have more adoption of DeFi.
Yes, absolutely. I think that could open up a great window for hybrid products or new opportunities for startup companies. So what do you think about it, Hock? What are the benefits besides what Nicole mentioned? Can you think of any other benefit that DeFi offer to end consumers?
So at least for now, obviously you get higher yield. Easily you can get between 4 to 10% from participating in DeFi staking or savings schemes. That compared to below 1% if you put in the traditional market, and you gain transparency, you know all the transactions. You are not going through middlemen or any organizations. Everything is run by the smart contract. So it's basically very trustless and very deterministic. What is stated to run will run. And the other thing is that you have full control of your asset. You are self-custodying the assets, all the digital assets you have, in contrast to traditional financial services, whereby you are going to trust the bank or your banker to hold on to your asset or your cash. And the other thing, the last but not least, I think is about the open participation. At least now, but that is going to be a big concern for regulators, because basically you don't even have to provide your name to participate in DeFi. You don't even need to have credit scores to take any loans. And the whole thing is censorship resistant. So it's really about freedom, and hence it's attracting the younger crowd to participate in the DeFi, and which is something that the banks will have to take note of in the longer run, because this will be the same customers who will grow older, and they will be expecting similar level of services and experience from banks. Thanks.
Thank you, Hock. Nika, my next question goes to you. What can be earned in the DeFi space, and is there any risk from your perspective?
Yeah, besides all the panelists mentioned about the alternatives and options of investment, I totally agree with that. And another right side of this is the inclusion, because you can get the better access to the financial products and services, but at the same time, there are some risks associated with it, and I mentioned it later. Besides inclusion, DeFi also reduce the intermediaries. So all the costs will be eliminated, and the benefits will go back to all the players. Okay. The most important thing is you need to understand and realize the associated risk. There are a few risks that we normally address. I think comparing to the existing or the current products, all the risks are still there. including additional ones, right? Using the platform, having the smart contracts, or and there's actually no entities that we can regulate because there's no intermediaries. Normally, the regulations will be based in the basis of entity-based or activity-based. But for banks, if you're a bank, you're doing anything that you'll be regulated. So talking about DeFi, you don't have the body to regulate. That is really challenging. For the risk of the investors, I think they need to be really understand the concepts and the products, and also don't use your retirement fund for this part, right? Because the the financial risk is still there. The risk of losing your money or principal, depending on the risk appetite that you have, because the price is really volatile, etc. And also the system itself, the platform. Those are the basic concepts of IT risk that regulators usually look at. But comparing to DeFi, is borderless, and you don't really have the body or even the system to do it. So that's a big question for the regulator as well. But I'm sure that all the market participants would like regulators to leave them alone, because they want to flourish with the innovation first and see the impact. And we are doing that. We are in the mode of wait and see. Normally, we look at the financial system stability. So as all our colleagues mentioned about the DeFi is not radically shifting, or making big changes right now. So we'll wait and see, and we consider to what extent we should step in.
Absolutely, you're very right. I totally agree that you should not use the retirement fund to try it on, but definitely give it a try. I think it's all about educating yourself in this new paradigm, right? So perhaps use a little bit of your money,
Tiny bit.
100 bucks USD, just to give it a try. Open up an exchange and buy some crypto or try a little product. And I think the whole process can actually get you educated a lot. The whole experience, how to keep up your private key versus the public key and all this stuff. So how about Bettina, what can we earn in the DeFi space from your perspective, and are there any other risks?
Well, from my perspective, actually, I wholly agree with what has been said, especially by Nicole. The whole purpose of digital is to be able to increase the ability for people to transact, to both buy and to sell, right? And this is necessary given today's circumstances. More importantly, the millennials are actually the ones that are jumping on this bandwagon very quickly. And believe it or not, I know of several young millennials, as in teenagers, who have jumped onto the bandwagon and have actually made very good monies for themselves. So going back to what you stated earlier about educating yourself, definitely that's there. Knowing that this is where the world's going, it's good to start them young. The only problem that I find here is the volatility of this whole business or part of the financial world. Wherein it's like playing the stock market sometimes, and it's worrisome, but it's very fruitful. So depending on your taste buds and ability to play, I think people just take that into consideration, as you said, and get educated, even with a little money, because this is where the future is going, and we won't be able to stop it. Traditional banks will just have to adapt into this type of transaction. Those that do not will end up closing their doors, because this is the way of the future.
Absolutely, thank you. Totally agree. My next question applies to all the panelists, because you're based in different jurisdictions. So I would like to hear from all of you, what are some of the challenges that in your specific country that is currently facing, but what are also the unique advantages? Why don't we start with Lika from Thailand perspective?
Yeah, as the transaction volume on DeFi is not really significant yet currently, but Thai market players are really active. We get into the 4th rank of the world to be the DeFi players. Unbelievable. And there are quite a few of the popular platforms on DeFi in Thailand as well. And also we've seen regulated entities like crypto exchange, the centralized crypto exchange, starting to explore the businesses, or even banks themselves that I mentioned about their subsidiaries to try out some of the products on this. But they can't really do it without consulting the regulators, because it's not really well governed yet on this space. So as you said, you have to educate yourself as an investor, and there's no legal protection or assurance yet. So we have to really send a message on this to the investors that consumer protection is really important, and also some of the AML CFT that the transactions are not being transacted in the illegal way by the illegal people. This is very important.
Okay, how about unique advantages in Thailand?
I think it's not much different from other markets, because people are seeking for more yield, and as long as they have some of their spare money to trial, and they're willing to do it because it's so promising. You get like 2 digits of benefits comparing to the existing deposits in the bank accounts, right? And also of the social impact as well, because celebrities or the stars actually engage into this kind of tokenization stuff as well. So that's another concern about the young generation, but they have opportunities to learn. I think if they fail fast and they can move fast, that's another thing. But as long as it's not in the black markets, something like that, it should be okay to learn. Yeah.
Sure, thank you. How about Troy? What are the main challenges that South Africa is currently facing, and the unique advantages?
Well, we've got many challenges, and I'm not going to bore you with that today, but I think the opportunities are certainly there. And perhaps let me just quote a reference that I read recently. So in America, they did a survey amongst millennials in that part of the market, and 70% of them said that they would rather go to a dentist first than actually go to a traditional bank. And that should be a very clear indication to people in the fintech space in terms of where the market is moving to ultimately going forward. Now, from a South African point of view, I think there's 2 significant opportunities. One, our regulator and also our central banking authority is approaching digital technologies in a very positive way. And certainly from a fintech entrepreneurial point of view, and to the comment that Lika made, and also to Bettina's comment early on, I would like to see the central banking authority encourage innovation rather than inhibit that, because otherwise you're going to be finding yourself at the backseat, not just in your own market, but also on a global scale, because investors are probably going to go to those markets where it's much more easier to do business going forward. So I think there's definitely a space for the regulator, but they need to ensure that they make the market very, very conducive to investment and also innovation at this stage. Secondly, in the South African context, yes, our regulator has set up a sandbox, which the opportunities like small fintech players can play around with. There are people playing in the digital wallet space. There are people playing in the crypto space. There's one or two players that I'm aware of that are playing in the artificial intelligence space, but also cross-border payments. International remittances is also a big opportunity that we're trying to harness right now. The only critique that I have about our marketplace is that our authorities are trying to apply an old traditional model to a new innovative disruptive model. And that, I think, is where it's stifling innovation at this stage. And I think as a regulator, as a central authority, I think you probably need to think outside of the box to say, like in the American scenario, 70% would rather go to their dentist than use traditional banks. How do you actually prepare regulation legislation to cater for that market going forward? Because ultimately, that's not going to change. That's going to become reality going forward. I envisage that the traditional banks are certainly going to battle, certainly in our context, and I'm hoping that the fintech players will be able to close that gap going forward. So those are just my thoughts on that particular question.
Interesting, thank you. How about Singapore, Hock?
Okay,
Like?
DeFi, yes, DeFi will be likely governed under the Payment Services Act in Singapore once there is clarity from the Financial Action Task Force, which currently the consultation paper is still undergoing due consideration. But I think one of the key challenges will be that if Singapore was to start regulating, we will face this sunrise issue, because there will be many other jurisdictions that won't be so fast in regulating DeFi. Even for the current travel rule, less than half of the jurisdictions are implementing that. So by regulating too early, we face the challenge of suppressing innovation in Singapore, and also some of the much needed investments coming into Singapore. Yeah, thanks.
Thank you. And Nicole, how about from Vietnam's perspective?
Yeah, so if you follow the news about Vietnam crypto scene recently, I have to be honest that there are not that many positive news, because actually there are a lot of what we call like scams with crypto and forex exchanges. Actually, before we've already got a sandbox in place, but it has not been, I would say it has not been as popular until now, when the government has paid more attention on blockchain and on regulating crypto. So we are coming to, let's say, a phase where right now the government is now really taking its toll on crypto, and they are now working towards putting more regulations around crypto. So actually, Vietnam has not, I would say, the rug pulls. That's like a term for exit scam by a lot of blockchain projects. Since that you've mentioned, right now to do fundraising on blockchain, it does not necessarily require like KYC or any certain kind of identity. I would say identity at the moment. So basically, there are a lot of cases where the fundraisers are going to run away with the money, leaving the investors, with nothing. So basically, there are a lot of those things happening. And I think at the moment for Vietnam, the government is now stepping in just to make sure that we are having some sort of framework in place and to avoid further scams. Other than that, I think Vietnam and Indonesia are among the most populous markets in Southeast Asia, with very young and tech-savvy population. And Vietnam has long been, been the destination for a lot of blockchain projects, especially thanks to its robust developer pool. So this is one of the reasons why a lot of projects are coming in here, and they're also tapping in the market in here. And I think according to a recent survey, we have the second highest crypto user in the world. I think that's quite surprising. Maybe we haven't got to that level yet, but I guess we've somehow been among the top, let's say, countries to adopt and to actually really use crypto after Nigeria. So yeah, so that's the thing with Vietnam at the moment. With Indonesia, I think at the moment, one of the key things about Indonesia is that this is it also has pretty high let's say financial inclusion. So the digital wallet adoption here is among the highest in Southeast Asia. At the moment, I think, well, statistically, 9 out of 10 internet users, they have a digital wallet in Indonesia, since that the country is very fragmented geographically. So basically, in terms of payment service, it's much better and much more convenient for the users there to do to use digital wallet to make all the payments. And basically with this digital wallet, there are so many ways you can play with it. I've been, of course, with digital products, and DeFi is just one step away. So right now with Tokocrypto, I mean, we are trying to bring in more products to the users here, you know, so with savings, with cashback. So we still give them the comfort of traditional products. So let's say savings and cashback. But on the other hand, for those who kind of have higher risk appetite, so how about trying out with some of our staking and, you know, kind of mining programs and so on. So let's say, yeah, there's a transition coming up, but I would say that for Vietnam and Indonesia, I mean, we are very positive since I think the reception for innovation and also especially in the financial sector is pretty high here. So yeah, I mean, if you come to Southeast Asia, or if you want to do business here, we would be more than happy to do any collaboration with you.
Absolutely, thank you. How about Philippine, Bettina?
Well, actually, both Troy and Nicole are extremely correct. In Asia, the Philippines, actually, chances are we're the #1 user for digital currency here. As you know, well, more in line with the fact that we have a lot of overseas. Okay, so a lot of them basically put into the digital wallets, the exchange monies, and it has driven our economy. Digital every they have succeeded. Of them are the main mainstream digital purchases, you know, and all kinds of bills. That's now, yes, innovation is always hindered by regulation. I agree with Troy 100% on that. And the Philippines, unfortunately, due to the fact that we have been a very open country relative to investments, has had to put in some regulations ahead of time, simply because there have been, well, Chinese money comes in, you know, and so we need to regulate that to make sure that it's all legal. So the AMLA, you know, has to handle that. So that's why the regulations here are so much more stringent. And then I agree with Hock that basically the problem with putting in all of these regulations is when you hinder the ability for growth, then basically the whole country ends up falling backwards. And it's not just a particular industry, it's the country, because it affects the economy, you know? So with that, we really need to see how we can balance both. And that's something that we have been doing here in trying to work with the regulators while making sure that we put in the necessary wordings that it does not actually stifle that growth.
Thank you, Bettina. So, yeah. Anything to add?
No, actually, yeah, no, I just wanted to say, yeah, this is working really great, this whole forum.
Sure. Thank you. I'm mindful of the time. I think we have about 5 minutes left. And I'd like to ask, I guess, a final question to all the panelists. What do you predict the future of DeFi in, say, 10 years from now? And also, do you have any final words to the audience for today? Why don't we start with Hock?
It took Bitcoin 10 years for institutional interest to come in. So I expect for DeFi, probably it will take shorter. I think eventually a modified form of DeFi that is compliant to money laundering, anti-money laundering and counter-terrorist financing regulation, and with sufficient investor protection in place, it will become part of the offering of financial services. Might not be the dominant form, but will be one form that will be popular among the younger population. Thanks.
Thank you, Hock. And Nicole?
Well, I do agree with Hock as well. I mean, I think the time in the blockchain era, I mean, it's different from the normal time that we have. So basically, with innovation, everything speeds up much faster, you know, in its own time. And I think we also have to take into account the fact that, you know, let's say with the pandemic, you know, coming in right now, I mean, there might be more stringent KYC. There might be more kind of requirements for lending. And basically, I mean, if the banks are going to stick to that, I think they're going to lose their cutting edge very soon. So I think with DeFi, it's I think the only way is to go up from here. And we can see that the reception has been kind of widespread, not only from the community, but also to, let's say, the policymakers. So World Economic Forum has its own, like, you know, policymaker toolkit for DeFi, which is very innovative, which is very breakthrough. So I would say that, yeah, in the next 10 years, yeah, we would be able to see that, you know, maybe the convergence between centralized finance and decentralized finance. Because I would say that, yeah, people would not be able to go there directly, but I think people are inching towards that future. And to the audience, I think, of course, at your own risk, maybe just give it a shot. Don't use all of your retirement fund, as our panelists have recommended, but just a little bit, see what works for you and how high can your, you know, risk appetite go. And I think, yeah, there will be a lot of innovations and a lot of experiences that you can learn and you can feel, you know, you would enjoy, just like what I did with my initial blockchain journey.
Thank you, Nicole. And Lika?
Yeah, personally, I think DeFi and the cryptocurrency products and services is going to be the next big thing. It's the revolution of the financial system, I could say that. And as being a regulator, I will make sure that my colleagues in the central bank understand this kind of products and really point out the real concerns. And I totally agree with Troy that we have to think out of the box. We can't really use the traditional mindsets or even the existing regulations to govern with this new type of products, because it's not going to fit in and you're going to lose opportunities. And at the end, you can't really compete with the rest of the world. So, but we'll make sure that, you know, you're investing at your own risk, as long as you understand and, you know, have the risk appetite. In this case, regulators are always there to support you.
Thank you very much, Lika. And Bettina?
Well, given today's pandemic, I basically foretell that DeFi will be the default in 5 years' time. I mean, default in the sense that more people will be using it. And potentially even in 3 years, there will be a major acceptance of this. So yes, there's going to be change. It's going to be revolutionary. And as I stated earlier, we all have to start learning if we are to survive this next big change in our whole economic system and monetary system. Thank you.
Thank you, Bettina. And Troy?
Yes, I have to concur with all the panelists at this stage, and I would like to suggest that in the next 10 years, I think the world in finance will be fundamentally different from what it is today. I see a world that will be driven by digital technologies, digital processes. I wait for the day that I'll have my own personal AI bot that will advise me on any financial investment that I need to make. And I think the traditional banking sector is going to look very different from what it is today. The point that Hock made was very interesting about blockchain. It took 10 years to almost reach $1 trillion in market cap over the last 10 years. It's taken, you know, the traditional banking sector almost 200 years to reach the point that it is right now. And as we know, this sector is the last globally to be disrupted, and I think is going to be disrupted the most. So I'm looking forward to what DeFi, fintech, blockchain, artificial intelligence, and a whole host of other tools. And I just hope, to Lika's point, that the regulators can keep up with this fast-changing world. But I think we're in for a very exciting future. Thank you.
Thank you. Thank you very much. Once again, I want to thank all the panelists, Lika, Nicole, Bettina, Troy, and Hock for joining a fabulous panel discussion on DeFi, and I look forward to hosting you in the near future. Next session, I would like to introduce Malik. Hi, Malik.
Hi.
Malik, are you here, Malik? Yes. Can you say,
Hey, Bowie.
yeah, sound check. Yes, great. So Malik is his full name is Malik Khan Kotadia. That's how you pronounce your last name, right? Yeah. So he is the co-founder and group chairman of GIFT Forum and a global board chairman. So that's the full title of GIFT. And I'd like to invite you to give a little remark for this event before we kickstart for the second panel. All to you, Malik.
Thank you very much, Bowie, and congratulations and thank you to all the panelists in the first one. I really enjoyed the session, although unfortunately I couldn't follow the whole thing. As I said, Anka and I just came in from another panel virtually from Jordan. Hockley hopped in, he left before us. So it's like one of those crazy days where you have either parallel or back-to-back panels, but we did thankfully make it on time. So thank you for being flexible, Bowie, and putting the introduction between the two sessions. I'll just take 5 minutes. I'll do a quick presentation. I'll share my screen so that people on the call can get some perspective. Most of us are well aware of GIFT, but it's my duty to kind of share a little bit of the why, the what, and the how for GIFT. So please let me know if you can see my screen.
Yep, you can I guess put full screen if you like.
Okay, so basically, for those of who here are our members, ExCo members, or have been with us since pretty much the beginning, you know that as a forum, our mantra is innovation for impact and inclusion, and the I in our name stands for all three, impact, inclusion, as well as innovation. Basically, GIFT is one of the most diverse and inclusive fintech forums and think tanks globally. We are a think tank of very, very high caliber members. So we are, not one of those which chases numbers. We don't have thousands of members. We have 500 plus members, but from 60 countries. So we're there in all over the world, and every member is by invite only. It has to be, kind of recommended by an existing member, and after a due diligence, we admit our members. So everyone here is a leader in her or his domain when it comes to digital finance. And as a non-profit think tank, globally, we are incorporated in Singapore, but our goal is to work with all sorts of stakeholders when it comes to the fintech ecosystem. And I think that was demonstrated quite well in the earlier panel, where you saw an entire spectrum of participants from, fintech, blockchain, the DeFi space. You had Bowie, who wears multiple hats apart from her hat at GIFT. She's an investor. She runs her company. Nicole, who's been in the blockchain space for as long as I can remember. Wijitleka, who's a regulator. Hockley, who of course needs no introduction. So, and you'll see a similar, I think, mix in our upcoming panel as well. So it's not really a classical industry association or a think tank which works only with regulators. We are a neutral platform. We work with all parts of the ecosystem, all stakeholders. And that is something which makes us both unique, as well as, if I may say, fairly powerful in the kind of perspectives we get, because we get perspectives from all sorts of stakeholders, and therefore we are able to bring together the most unbiased as well as the most cutting edge view. And we are literally all over the world. So our channels are going on with conversations 24/7, sunrise to sunset. And when many of us are sleeping, many of us are discussing about what's happening in markets like Argentina or Colombia or Bahamas or Mexico or Brazil or US or Canada, and vice versa. So that's really, the interesting part about this forum. It's truly global and it's truly diverse and inclusive. And of course, because we have this unique advantage and vantage view of getting a perspective from some of the best minds in the industry, but also practitioners and also regulators, as well as people from multilateral agencies. In fact, our vice chairpersons, Ayaz and Lotta, are both from multilateral agencies. Lotta is with the Asian Development Bank and Ayaz is with the United Nations. So, we work with all sorts of stakeholders. And of course, opportunities like these are our ways of sharing our learnings, cutting edge learnings and best practice sharing with the community, but also ways for community building, deepening global networks, collaboration, and ecosystem development. And as I said, aligned to what I shared earlier, our vision, mission, and values are very important to us. In fact, the members we admit are also, folks who are not just leaders in their domain, but who align with our values. Our vision is, of course, to be the most inclusive and diverse fintech and impactful fintech community for thought leadership, but also for development of the ecosystem. And to do that, our mission is to engage with key stakeholders in the fintech ecosystem to help drive not just financial inclusion, but hopefully also social and digital inclusion. These are very, very important objectives, not just for central bankers and regulators like what Wijitleka said, but for all of us as a community to help do our part in driving inclusion. And we try and do that through our four pillars, the four C's. Content, this is a classic example of how we are sharing content and thought leadership and knowledge from different parts of the ecosystem, and how we try and bring the community together. The third C is, of course, cooperation and collaboration. And that may, kind of comes in quite seamlessly to us because we are a global network, a global platform. So cooperation and collaboration is what we try and foster, not just between countries, ecosystems of countries, but also across regions. And therefore, we are extremely happy and delighted that we are having this event as a community event for the Africa Blockchain Week. And I was just sharing before this with some of our community members and GIFT that this is actually our fourth event in Africa and the MENA region in the last 1 month. So clearly Africa and Middle East and North Africa is a part of the world that is important for us, not just from an inclusion standpoint, but also because there's so much opportunity and so much exciting stuff happening there when it comes to fintech. Many exciting markets, not just Morocco, but Nigeria, Kenya, Uganda, South Africa, etc. And finally, the fourth, as I said, is causes. So we try and leverage technology for impact and inclusion. This is how we try and actualize and operationalize our visions. Of course, knowledge sharing, but we also work with partners on capacity building, whether they are multilateral agencies or government agencies or regulators, networking and growth, knowledge sharing, standardization, and empowerment of the community. For those who might be interested to join us, we have multiple global thematic groups. So because we cover so many aspects of the digital finance space, and it's a space which is evolving all the time, and it's evolving so fast, as we heard in the previous panel, we have structured ourselves by multiple thematic groups. So you can be a part of one of them or one or more of them, depending on your areas of interest and work. So of course, financial inclusion and sustainable fintech is a very important thematic group, and it's very important for us. Blockchain and CBDC, as you heard today, which includes DeFi as well. Related to this, we are setting up a thematic group on non-fungible tokens, innovation in payments, but of course also on the controls and compliance side. So we have a thematic group on RegTech and RiskTech, open banking and open finance, which is the next big thing. We are setting up one for investments and startups, and finally on Islamic fintech as well. And these are our regional chapters. So, we have chapters all over the world, regional chapters. We launched South Asia last year in June. Then we launched our LATAM and the Caribbean chapter earlier this year. And just last week, we had the launch of our Eastern European and Caucasus chapter in Georgia. And now we are glad to be back in Africa. Hopefully in July or August, we'll have the launch of our Southeast Asia chapter. And you can go on our website, www.globalimpactfintech.org, to check out and stay abreast with our launches. We will have a formal launch in Africa and MENA region either later this year or early part of next year, and similarly in other parts of Europe as well. This is our global board. Hock, as you already saw, he was there in the previous panel, and you will see some of us, including our treasurer Zing, in the next panel. Mushir was also there in the previous panel. Sorry, he's here in the current panel. So, we try and have a board as well as our ExCo, which is well represented in terms of diversity, whether it is in terms of geography, countries, cultures, digital maturity, gender, all sorts of criteria for inclusion. And we have we are fortunate to have some extremely good global advisors from all over the world. Many of them have been with us since the beginning. These are some of the strategic partnerships we have. As I said, we worked with the UN CDF earlier this year. We've worked with some of the leading publications, and we've been a partner with Cambridge University for their CCAF, the Alternative Finance Center. And I'm glad to share that just today, CCAF is releasing its second research report in which GIFT was one of the partners. So stay tuned. Tanya, who's also our member since the very beginning, is leading this effort on the side of Cambridge. So stay tuned for this. And these are some of the partnerships we are in discussions with Asian Development Bank, European Blockchain Federation, and of course, as Africa is important, so we are engaging with the Africa FinTech Network as well. These are various parts of the world and various thought leadership and knowledge sharing sessions we've done. I'll just skip through them. You can check them out on our website. This is where we are today. So thank you, Bowie, once again for putting it all together. An absolutely stellar lineup of speakers from 8 countries. So that's the power of GIFT. In a single event, we give you a global perspective. And this is how I would like to end again, that the power of this network is that it's truly global. Although we are officially incorporated in Singapore, we are there all over the world. We look to partner with you and to support you. And if you're interested to become a partner or supporting us or need our help, feel free to reach out to us. Thank you.
Thank you very much, Malik. Great presentation of GIFT, and that made me excited to continue to organize more related educational events for GIFT going forward. Now, I'd like to introduce our next exciting panel. The next panel discussion is about central bank digital currency and DLT, distributed ledger technology. So our moderator is Zing, also GIFT directors and treasurer of GIFT. So Zing, the stage is yours.
Thanks so much, Bowie. Hi, everyone. Thanks so much for making time today to attend our panel. We have a really good group here, and thank you, Malik, for the kind introduction. This panel, if I may just introduce our panelists, it includes Malik himself, our chairman of GIFT, Anka, who heads partnerships, policy and advocacy at C-Labs, and it's also now ExCo at GIFT. Musher, he's the director in charge of the ecosystem and Islamic fintech, and equally passionate about inclusion. And then we have Dr. Oreo, who is our lead in the area of inclusion. So we hear a lot about from him pertaining to that topic, as well as in central bank digital currencies. And then we have Sarun, who joins us from the Bank of Thailand, and he's in the digital currency team. So with such an esteemed group, I think we'll really be able to have our eyes and ears treated to a lot of these insights. So thank you so much for being here. I guess just as an opening, perhaps we could ask, for some of our new friends who are new to CBDCs, what actually are central bank digital currencies and how do they differ from what is commonly known as digital money or digital payments? I wonder, maybe Musher, do you want to get that going for us?
Thank you so much, and thank you to Bobby and Exchange for having us today. Delighted to be here from Hong Kong. And a very important question, and I mean, it's probably simple at one level and probably complex at another level. But in a sense, a central bank digital currency is a digital representation of your regular fiat money on a distributed technology. Now, this may or may not be a blockchain, but some of the key elements that differentiate it from digital money is digital money is, you have a representation in physical cash as well. It's an equivalent and you can withdraw it in that sense, but CBDCs are likely to be completely digital. You will also have one central authority controlling it versus a cryptocurrency, which is typically tends to be decentralized. In addition, the central bank will be able to do a host of different monetary activities, including setting inflation, controlling money supply, and potentially setting a limit on when the money will expire, which is going to be the most interesting element of a CBDC. So I'll stop with that explanation. I'm sure some of the others may have a few elements to add. Thank you.
Thank you for that. I think you're exactly right. And I think the most interesting aspect that potentially differentiates CBDCs from digital money is exactly that programmability aspect, right? This is not a characteristic that money has had before, being able to be programmed. And I think it's really exciting to try and understand what this could mean for financial stability, for monetary policy, but to some extent, even to, AML, CFT compliance, to being able to get, almost real live data on, aggregated macroeconomic trends and being able to react to that. But to some extent, it'll all depend on how CBDCs are being designed and implemented.
Mm. And that brings us to the question, right? Do CBDCs require blockchain or distributed ledger technology at all in the first place? Some thoughts, and basically, do we really need CBDCs? Curious if Sarun have any thoughts from Bank of Thailand.
Yes, I can take that. For me, the blockchain or DLT is definitely a possible option for CBDC creation, given is many advantages. For example, the resiliency, as we know that in the blockchain there's managed by multiple nodes, and so that we benefit from the network of the node. And another thing is data integrity, and also as you just mentioned, that is about the innovative function from smart contract that people can develop application based on that. Yeah, but from our experience in the past experiment, we have seen that there are some limitation in blockchain as well. For example, when you talk about the performance for the transaction that need to be settled instantaneous, it might not be answered if we using the blockchain. For example, the Bitcoin, it takes around 10 or 15 minutes to settle. And another thing is about the privacy issue. The transaction on blockchain is pseudo anonymous, so it means that it uses pseudonym to represent the people. Although we don't know who exactly that is, but it still have some trace on that. That's my thought on that. So it's possible option, but there are also other options to implement the CBDC.
And Malik, what is your thought on the same question? And do you think this complements or substitutes cash?
So I think Sarun has already given a very good, kind of segue to this. My view, and this obviously does not come from a first-hand regulator perspective, but from having chatted and discussed and explored this with many regulators, especially the ones in Asia who are doing these things, like Bank of Thailand and Cambodia, etc. The objectives of central banks are reasonably clear. One is obviously, I think most of them, whether they would say it or not, want to move away from cash in some form or fashion and move towards cashless economy. The reasons are not very difficult to understand or comprehend. Obviously, cashless is cheaper, digital transactions are cheaper, they are faster, they are more transparent. In many countries in Asia, and this is something perhaps our friends in Africa will also understand, the prevalence of the parallel economy. And when there is cash, there is a parallel economy in some cases up to 40% or more. And of course, when transactions move electronically with the features of cash, the parallel economy substantially reduces, if not gets eliminated altogether. So I think from a regulator standpoint, the need, the raison d'etre, and perhaps the urgency, especially after what happened with Facebook Libra getting launched in 2019, as we all saw, there was almost like the pre and post 2019 kind of an approach of central bankers. So that is something which is quite clear. Now, from a consumer's perspective, there are obviously quite a few questions, and I'm sure we'll hear from other experts as well in terms of is this like while this is digital money and programmable money, as Anka said, does this have the equivalence of cash in some way? Will it be programmed or architected to ensure privacy, and therefore, while the objectives of the regulators and central bankers are met in terms of making the economy more frictionless, seamless, or the payment system more well governed in terms of parallel economy, AML, KYC, etc. Can it also give adequate privacy and the features of cash? So the peer-to-peer feature of cash is obviously there when it comes to CBDCs and digital currencies, but can it really be a viable alternative to cash? If that's the case, I think we can see a significant uptake from users. If not, then we have to wait and watch, because then we are having these two kind of forces in which the objectives might not necessarily align. And then it's a question of, yes, you can launch all the CBDCs that you want, but will people adopt it?
That's right. And so to the panel, I mean, we've talked about programmable money and the fact that, you could also have privacy with it. I was actually quite curious, are there other functions or features that are, especially important as it comes to CBDCs in the consideration, maybe even in the architecture and the way you think about it? Yeah, how should people be thinking about it? Any thoughts?
Well, I think we have a list of characteristics that earlier, I think 2 months ago, came out of the European Central Bank, right? Fabio Panetta, who's a member of the executive board, talked about the study that the European Central Bank did, the consultations regarding what features are important for the digital euro. Privacy, which was already mentioned, came out the most important one. Being able to prevent anti-money laundering, again, came up and it was one of the most important one. And then questions around security, around being able to seamlessly be implemented throughout the entire euro area. There are other questions around costs and being able to access the digital currency offline. And that it should be able to make cross-border payments easier and be integrated into existing payment infrastructure, right? And so a lot of the things that we expect nowadays from payment mechanisms, with the added commitment that came out recently around sustainable low emission DLT technology usage for it. Yeah, I think it's one of the few central banks that came out with sort of a list of characteristics that you're looking at very transparently. So I think it's interesting to look at that as a starting point.
Maybe to add on top of this, I'm sure Sarun among us will have.
That's great. Thank you for sharing.
So I was just saying, maybe to add on top of that, I'm sure Sarun will have some views from a central banker perspective. But one of the other things that we need to look at is the element between retail CBDCs versus wholesale CBDCs. So retail CBDCs will be for the end consumer as we consider it. So largely will exist within the country's ecosystem, not necessarily for cross-border, while wholesale CBDC have an element for businesses and would have a strong cross-border element. In particular, when we're looking at Project Lion Rock Inathon, which Bank of Thailand and the Hong Kong Monetary Authority have been working on, right? Largely on the wholesale end. But I guess there comes the question, once you look at cross-border, even if it's retail and we consider cross-border, there comes implications of interoperability, right? Not, as we mentioned at the beginning, not all central banks are going to be using the same underlying protocols for the DLT or the same blockchain for that matter. So interoperability becomes a challenge because you want your money to be there. Otherwise, it's stuck in one system within your country, right? So projects like the MCBDCs being trialed by the Bank for International Settlements with HKMA, People's Bank of China, the PBOC Central Bank, plus UAE Central Bank and Bank of Thailand are important trials that are going on. So I see that as a major element in terms of cross-border nature and solving that for interoperability to make that seamless globally in the next, ideally next 3 years, but realistically probably next 5 to 7 years.
Thanks, Risha. That's very interesting. At this point, do any of the panel members see whether there's actually a gold standard that's starting to emerge? Is one protocol stronger than the other? Do people sort of just develop their own blockchains? How do you think about it? And particularly, you know, Sarun, if you also have perspective in what's happening in Thailand or perhaps even in Southeast Asia among regional countries, it would be great to hear from you.
Sorry, what was your first question? Can you say again?
First question, I guess it's open to the entire panel. It's more about, is there a gold standard that's appearing, right, in terms of interoperability? And the second question was more about like Thailand's experience and maybe your own experience in relation to maybe Southeast Asian countries.
For the CBDC, you mentioned about the gold standard, but to be honest, from my point of view, I don't see there's gold standard at the moment because we still at the early stage of the experiment, and for the most of the central banks still exploring many ways they can implement the CBDC. They still need to wait on pros and cons on each technologies, and I believe that there's no final or only answer for implementing CBDC. Apart from PBOC from China that has a strong view on the centralized system. For other central bank, I think we're still at the early stage to learn the technologies.
Anybody has other perspectives?
No, I mean,
yeah.
Sorry.
No, go ahead. I'll chime in
Yes.
after.
Okay, no problem. No, basically, I was going to say that I fully agree with Sarun. No, I mean, I feel like when it comes to talking about all these topics we're talking now about technology, etc., I think we should maybe like gather again in a couple of years from now, no, in order to be more capable, no, of discussing what other central banks are doing, because aside from China and a few other smaller countries like the Bahamas, for example, in the rest of cases we're talking about very early stage projects, no, so it's still like a bit difficult for us, no, to be able to try to establish some standards, because we are just talking about like very initial tests.
Understand. And as you've mentioned, Asia has actually been particularly progressive as it comes to CBDCs. We mentioned China, for example, get the digital yuan. South Korea and actually the Bank of Japan have also both started their pilots. So if we were to look at the other side of it, what do you think are the requisite factors to successful adoption? What would make something take off, and what would central banks look for in order to say, hey, you know, this project is going well, there's traction over here? Any thought, panelists?
I can go for this one as well if you want.
Sure.
Well, basically, I mean, as we were talking now, there are like many ongoing CBDC projects in the whole world, but especially in Asia. I mean, Asia seems to be like the continent, the area in the world where CBDC seem to be like attracting much more interest. And I think that in that sense, I don't think there is just like one single list of requisite factors, no, to a successful adoption, because this pretty much depends on each central bank. I mean, each central bank is going to deploy or not its CBDC according to its own like policies and interests. But generally speaking, I would say that, I mean, I may be wrong, but I feel like some requisites could be, in first place, maybe like the right technical architecture. That's like basic for sure. And aside from that, we need a keen interest, no, from that government and central bank. And without that interest, there is not going to be a CBDC, because it takes years, no, to like actually test and eventually deploy that CBDC. So we need that central bank to go like full scale, no, with it. And aside from that, we also need collaboration, no, from the general public, in the sense that it's always going to be easier to deploy a CBDC in a country where people are already like used to using electronic means of payment, like for example China, compared to those countries where people are still like much more reliant on cash, such as for example Japan. So I think those could all of them be some requisites. I was well, I would like to make reference as well to the Bank of Canada, for example. They write those very interesting reports and stuff, analytical notes, and they, for example, stated, I know this only applies to them, but still it's quite a common mindset in the West. They said that a CBDC could become beneficial or even necessary if the use of banknotes were to decline, and also if one or more alternative digital currencies were going to become like massive, no, and eventually like a risk to threaten the position of the Canadian dollar. So we all see that two of the main basic requisites established by most central banks, at least in the West, are those two. No, the idea of seeing a decline in the use of cash, and secondly, this idea of seeing other means of payment. And when they say that, they are actually referring to cryptocurrencies most of the time, becoming like mainstream, no, and maybe too mainstream, no, for them. So this is why those are like two case scenarios where they would like become even more active, no, in the idea of eventually deploying a CBDC.
Understand.
I had a short answer to add. And to be successful adoption, I think for the cost of the consumer, it shouldn't require the like a high-end device. I mean that or low-cost device should be supported by in CBDC usage. And another thing is it should support for the unbanked people. It means that they don't need a bank account to use a CBDC. I think that's my thought on that.
That actually, oh, go
Sorry,
ahead.
No, I was just going to add, I guess one of the other challenges is how the structure is, and Oriel touched upon this very much, is what structure do they adopt? Are the central banks going to go in with a direct to consumer model, depending, as I'm using that term very loosely in terms of direct to consumer, but whether we will have individuals being able to have their CBDC account and wallet directly with the central bank, or will they choose to use intermediary banks, as is the case currently? Now, if they choose to go with the intermediary banks, then we continue to have kind of similar system to what we have. If not, if they choose to have direct accounts, then you have to ensure that all of that is maintained well. You also have to ensure that these commercial banks that are now no longer in use, how do you sustain them, right? It's not just about protecting banks, but they are integral to the financial ecosystem. So how do you rewire your financial ecosystem becomes very important. And this could potentially lead to a bank run if not managed properly. If I don't think my money is going to be worth much in a bank, I can just withdraw it and then put it with the central bank, then I may just do that, right? Last one is, on a similar note, is how easy does the central bank make it for e-wallet players? Like in mainland China, the PBOC has spoken about using Alipay and WeChat Pay for the distribution of ECNY. But on the other end, when people are using ECNY, how easy for any CBDC to conduct transactions on e-commerce websites, etc. Right? So the acceptance becomes important. So it needs to be legal tender and needs to be accepted by all parties online. So,
yeah. Yeah, actually, you touched on a very interesting point, and I know, Oreo as well as Mushir, both of you are, especially, Malik including, actually all of us are very interested and passionate about financial inclusion. How do you guys think about, you briefly alluded to banking the unbanked. Are there other ways by which CBDCs actually help to enable financial inclusion, particularly in countries, in Africa, very timely that we're on this call, in emerging Asia, where, a good proportion of the population is actually unbanked? What thoughts did you have? Open to the panel.
So I can perhaps go for that, Zing, and as you rightly said, all of us at GIFT, or at least the ones on this panel and the previous panel, are extremely passionate about inclusion. As I said, one of the eyes in our GIFT is for inclusion, and inclusion obviously includes social, economic, and financial inclusion. So the point here is, and I probably take a slightly, it's not contrarian, but I want to kind of put things in perspective. I I think most of us agree and understand and have seen it in, right from countries like China to India to even Indonesia, that digital payments systems and then the three F's, right, that we say: faster, frictionless, premium, or faster, cheaper, and simpler. If you make payments faster, simpler, cheaper, then it really drives inclusion and large-scale adoption, or technologies like QR codes, which have made payment acceptance ubiquitous. And we understand that there has traditionally been a very, very large segment or pool of customers who have been outside of the mainstream banking ecosystem. For all the talk, there are factors why they've been out of the banking system, and many of us, including myself, come from a banking background of many years. So the economics just didn't make sense, right? Banks want to go, or economically, they will only go for a certain segment of customers, and then automatically a certain other segment of customers is excluded. And then you have these digital payments and ubiquitous, simpler technologies, which have made, if I may loosely use that term, bottom of the pyramid accessible into the financial system. So my question, and I think it's a question we discussed on the earlier panel, we were there as well, and it's something that regulators are perhaps also grappling with. If you have a sufficiently well-developed and thriving digital payments ecosystem in the country, which is obviously not going out of control, perhaps this is a bit different from China, or monopolies are not being formed, then what additional or incremental role can CBDCs play? Yes, you can talk about central bank money being safer than commercial bank money, or payment wallets, etc., as Moshir said. But there are counter risks to that as well, that you are probably, are you potentially creating a challenge or threat to your existing financial infrastructure, both legacy as well as new or innovative, which have come up in the last 10 years or so. So I think that's, rather than saying that CBDCs will solve for or add to financial inclusion, my humble submission and a question for not just the regulators on our panel, but generally would be, what is the answer to this question, and what is the reflection on this thing? What additional or incremental value add does a central bank wallet, for example, give you versus an Alipay or a WeChat, a Tencent 10 wallet, or Grab or Gojek, etc. So that would be my submission. And perhaps if this goes back to some of our earlier conversations, if the objectives are very clearly defined and mapped out, and they are aligned with the stakeholders on why different central banks are going for this, not just a FOMO approach, but it's very clearly mapped out in the context of national priorities, then maybe in some cases, wholesale is the way to go. Retail should not be the way to go. You kind of empower and reduce friction in the settlement system. If you have an up and coming, or you have a pretty good payment system and a payment network, you see country after country in Southeast Asia, and perhaps it's the same with M-Pesa in Kenya, etc. as well, right? People are very familiar and used to using digital payments and digital wallets. So do you need to create another central bank alternative to that, or should you be the rails, or should you reduce friction in the rails behind it? So I think that would be my 2 cents on CBDCs and their role in financial inclusion.
Thank you, Malik. Dr. Aryo, do you have anything to add with the experience over in Latin?
Sure. Well, actually, my main area of interest is mostly Asia rather than Latin. But regarding what Malik just said, I think he was actually, he was spot on when it comes to wondering that. I think that maybe it might be about trying to build the rails. CBDCs per se are going, I don't think that they are going to be like the only element, allowing certain bank people to become financially included. They are going to be just one more element alongside, for example, of virtual banking, alongside those payments, digital payments apps that we mentioned. So I think that CBDCs are going to be one more element, an important one, but one more that perhaps might be used, as Malik suggested, as a way to build the rails, in order to try to integrate them all and make them all much smoother. I think that when it comes to financial inclusion, we need to start from the premise, from the base, that this is actually a very tricky topic, in the sense that one of the main problems for financial inclusion is precisely the lack of money. No? So when we're talking about lack of money, in that case, I mean, there's not much that a CBDC or any other platform may make for these unbanked people, because the problem in that case is structural. No? So it's much more difficult to change. So when we talk about trying to bank the unbanked, we are talking about those cases which account for like 41% of cases worldwide, where these people, they have some money, but what they lack is this physical access to a bank branch. So these people, they have a smartphone, they have a laptop, but they lack this access to a bank branch because they live in rural, remote areas. So it's in that case where CBDCs may make a difference, even though, as Malik said, there are other elements that may make a difference as well. So it's all about trying to see how they can all coexist, because CBDCs may be game-changing, but they are not the only element that may be such a game-changer.
If I may chime in a little bit, drawing on just the experience of the World Bank in the past, where I worked on financial inclusion. We used to refer to financial inclusion by the sort of AAA framework, which was improving access or affordable products who are appropriate for their users. And I think the answer to how could CBDC help financial inclusion, again, will all be in design, but you could imagine that with a CBDC based on blockchain, you can improve access by, for example, storing or having access to that traceable history of transaction, which could amount to a proxy of creditworthiness to a lot of people who do transaction, but in regions where credit bureaus don't pull in data for microfinances or from digital lenders or a lot of others. And you would have this one source of truth that is immutable, where you can pull the history of transactions and again, build algorithms that are more appropriate to the century around creditworthiness. And then enabling people to access services that presumably through DeFi, the cost of customizing and programming financial services and products for people that are not attractive customers to larger, financial sector providers decreases dramatically, because you don't need to create a whole lending line that is appropriate for one customer. You can customize through smart contracts directly for that customer, for their credit profile, for their needs, much more cheaply than current FSPs can do it. And then and therefore you give them more appropriate both lending, credit, insurance, saving products than what the current market has. And again, I think if we go back a little bit to the standards that a successful CBDC would have, and this is a conversation that is currently ongoing at the World Bank and the IMF. I know the Digital Advisory at the IMF and the Blockchain Innovation Lab at the World Bank are actually testing different things and sort of wondering what standards are. Unless you can, again, ensure that last mile, that you can access things on phones, but not only on smartphones, on feature phones in terms of access, then it's unlikely that as much as you wanted, this can contribute to financial inclusion, not to the already included 50%, but to the rest of the population.
To add to what Anka said, right, I think financial inclusion, mobile phones become very important. One other example of where this can work for financial inclusion is direct debit of subsidies and other government grants to the unbanked and those who are financially underprivileged. Right now, when we take the example of India, you have something called the Jan Dhan account, which literally translates to the People's Wealth Account, which government of India initiated about, probably 400 million to 500 million people were given these accounts because a large amount of India was unbanked. However, as much as the government can, credit the accounts, it's not necessary that these people have access to those bank accounts. Quite a few of those accounts tend to be dormant or not really accessed regularly. On the other hand, if you get that money straight into your phone, be it a feature phone or be it a smartphone, then you have more incentive to use it, and you're more likely to use it as well, right? And less likely that somebody is going to go and withdraw that money on your name. Now, here is an example of how this could be empowering for women or men also who are highly not in control of their money or under subjugative authority, right? So in this case, if you have that money in your phone directly, then you can go use it for a multitude of your payments, which you may not have had access earlier because somebody else in the family controls the wealth, or somebody in the society controls that wealth, and they may then go and withdraw that cash on your behalf, and you don't have that access at all. Right? If it's on your phone, you probably now have better access and are able to do more potentially with that, not necessarily all the time, but that could be another element of how financial inclusion could be driven through CBDCs. In a sense, you could also start looking at a broader story on this, which could extend into shared KYC. Now, if the central bank has your ID or is able to identify that wallet, you then don't need to be getting KYC done in multiple institutions or for multiple institutions. You then have one effectively gold standard, as we can call it, right, through that CBDC wallet being validated by the central bank and being used for potentially legal uses. Yeah, thank you.
That's great. And we've actually answered a couple of questions blended in with the response from our panel in terms of architecture, accessibility, what to look out for. It's sort of all intertwined, especially when the technology is in its very early days. So just to let the rest of the audience members actually understand, what are the different technology options and perhaps even some key industry players in the areas of CBDCs that people should keep their eyes peeled for? What's up and coming, what seems to be working well. What are the different options? This is open to any speaker who wishes to chime in.
Let me try. For the current infrastructure, if you looking at the central bank money, it involves only the central bank and banks before the central bank money or cash reaching to the end user, right? But if you think forward to the CBDC, I believe that there may be some other players involved in this process. For example, non-banks or even the fintech startup who can come in and play a role in developing the digital payment and some other innovations or application on top of the CBDC, because it tends to have more features than cash, right? And you guys just mentioned that it should have like a programmability features. So I think that in terms of the player, there could be more variety of player involved for the CBDCs.
Yeah, people have talked about having people who build the rails, right? They're all on-ramp to greater usage. And perhaps that's what's needed in early stages of adoption. Anka, Oriel, Moshia, Malik, any other thoughts on this question?
I mean, I represent one of the industry players, so I feel that my view is not necessarily objective on who are the main players. But like, I think trying to sort of zoom out and be objective, I think you can have CBDC on blockchain or not on blockchain. That's just entirely and I think you start with your policy goals and then you decide what technology works better. There are a number of sandboxes out there for central banks to test in. And I think experimenting in this sort of risk-free environment to get to know more than one technology is really the path to go. And starting that experimentation with the idea of what are our goals, what are our needs for this to be successful and achieve our policy goals, and then find a right technology to make that work is probably the path we're going to see. We have some established players that have been around, whether it's enterprise blockchain or open blockchains out there. Ultimately, my personal sense and the conversations that our team has had with central banks testing on this is quite a bit of a preference of launching on a private blockchain and bridging to public, and sort of being able to have that control that is really necessary for a central bank to be able to comply with its mandate of ensuring financial stability and all of that. And at that point, again, we've had the conversation about interoperability. It's really, really necessary that that is one of the standards of how easy and how fast the interoperability and the bridging happens to be able to make it feasible. And I think I've managed to answer that without naming any players, because it's just, again, I'm not going to be objective in that.
It's fine.
Maybe somebody Untitled is fine, telling whom you work for. I'm just going to add on top. I think enterprise blockchain companies are becoming more important. There are a few who used to be, one of them which is led by a co-founder of Ethereum. Now I'm not using names, but referring to a company there now, who are involved in CBDC projects globally. But many of the consortiums, right, the original consortiums from Hyperledger to R3, etc., are also actively involved because they came out as elements of supporting the ecosystem, and now they are focusing central banks, right? It will be varied. There will be not just technology considerations, there'll also be geopolitical considerations, which we have to keep in mind. This is central bank digital currency. So you may not necessarily have somebody who's very successful in parts of Asia getting the same access in Europe or in the West, or vice versa, right? It's just a matter of geopolitics. So you may face that as well. So those who are able to build those interoperable rails, as Anka was mentioning, will be the most important people for me. On the other side, I think the central banks themselves have been doing significant amount of work, including the Bank of Thailand and a few others for last 5 to 7 years. And a variety of global institutions like JP Morgan were involved with Project Ubin in Singapore. You've had other big investment banks and retail banks involved as well. So it'll be a mixture of players who will be able to build it for that local ecosystem, eventually with the help of consortiums that will help for interoperability. That's my take on it.
Understand. And panelists, I mean, how do you see the interaction or even the trading of CBDCs play out vis-a-vis other fiat currencies? Any thoughts?
I'll be very honest. I don't think trading as one. I mean, I see it mostly as normal foreign exchange, right? It shouldn't. If we're looking for CBDC, what we're looking for is the stability of a currency that has all of the old features of money plus the new features that the technology can bring on. Trading, to me, and actually with Malik, we were having this discussion in another panel just earlier this morning. There's the trading aspect that pertains to what is closer to crypto assets. And then when it comes to, to stable coins, or in this case, CBDCs, I think the stability of it, being able to reliably exchange it one-to-one with the national fiat is the most important. And I don't think that at any point it would be desirable to see the fluctuations that some of the crypto assets are having. I mean, in and of itself, currencies value and devalue against others, and so it's always a inherent volatility risk depending on how you do it, and it's always very it's not absolute, right? It's in relationship to what, but some of that, again, that's the beauty of blockchain, can be programmed into the money. Yeah, I think it's just, that's, trading is not an attribute that I would necessarily think of for CBDCs. But curious what others' positions is.
I'm going to build on this because I think Anka precedes my thoughts in the majority of this conversation today. So that's an interesting element, right? Trading per se, you don't look at most currencies as an asset. Possibly you look at dollar as an asset, potentially the euro as an asset. In certain countries where their currencies are not strong enough, they look at an alternative, viable, stable globally accepted currency, right? And I'm using all of those terms to describe the US dollar, which is very important in this element. One very important element is the universal acceptance of the dollar and the value of the dollar. Now, because of that, a majority of the world's global, not global currencies, majority of the world's currencies are uh, are pegged against the US dollar or interoperable only against the US dollar, maybe with the euro and maybe with the pound, right? That's for a majority, right? So they're not convertible otherwise. So if so like Indian rupee probably convertible against the US dollar, but not against anything else. So whenever there is a conversion of an Indian rupee to a Chinese renminbi, typically you take the dollar rate for each of them and then you convert that, which is usually programmed. What CBDC brings to the fore is a potential, you can do away with the need for this pegging to the US dollar. This is one of the things I am expecting, right? This is a bit controversial to a certain extent, but it could lead to the need for, you don't need global standards or universal standards to peg against. It could just be based on the trade that these countries have. How did the US dollar become the most dominant? Because the US was the largest economy at the turn of World War II when most economies were suffering. So you needed something stable. Plus, it was the #1 trade partner for a majority of the world's economies, right? Now we're seeing that shift in balance where China is becoming either the #1 or #2 trade partner for quite a few countries. So if you're going to be existing in the Belt and Road ecosystem or in the Pearl ecosystem, right, you will then start looking at ways where people may not need that US dollar intermediary, right? And you could just directly exchange money. One of the things that was the beauty of the project Inathon, and I'm repeating that because we have Sarun here, is that you could exchange that without needing the third currency, right? Because the central banks are effectively settling those tokens for you on each end for the wholesale currency. So if you expand that into the One Belt, One Road ecosystem, then the need to hold US dollar reserves, which is what a lot of countries do because they want to maintain the stability of their currency, goes away, right? Not to a full 100% extent, but to a certain extent, starting to affect the dynamics of global currency valuation. And that could be one of the positives that comes out of the CBDCs, which is you may not need one currency to fluctuate. And because it's programmable, you could then have dynamic floating currencies of between 1:1, which is, in a sense, think of it as peer-to-peer in a central bank world rather than having a pegged world. That's how I would put it. It's a bit controversial, a little bit more theoretical, maybe at this stage, but something to explore. Yeah.
And that is what makes it so interesting, right? I mean, I think the average person would not be thinking about trading as it pertains to CBDC, but in the real world, there is a lot of foreign exchange kind of trading, right? That's like one of your largest market is Forex trading. And so I think the natural question there would be, now what happens if you have CBDC, and how would people even look to exploit such a new thing,
And the reference could be the gold standard. Up until the 70s with the Bretton Woods Agreement, you had the gold standard. So you had that X amount of dollars and gold, and people were not relying on the US dollar, but the gold amount, right?
Exactly.
Once that went away, it was a trust that the Fed or the central banks are only going to print X amount of money. And we all know that that's no longer holds good because there's been excess printing of money than the amount of gold any of the central banks hold among the major economies. So this will be that transition. Probably dollar is that gold standard for everybody for now, the US dollar, and that will also switch in due course.
Yeah, that's right. I know we have just about 5 minutes or so before this panel ends. I want to let participants know that we do have a lot more questions we could answer, but if any of you have pressing questions that you would want any of our esteemed panelists to talk about, to send me or the group a chat, and we can try to address those questions as well. Don't feel shy about it. So as we await your questions, maybe I'll just ask the next one. We've spoken a lot about CBDCs, about privacy. So actually pertaining from this, it flows that how should central banks be thinking about privacy? It's a big theme. It's one of the largest, as Anka had just mentioned. Are there specific points over there that are of particular concern? What do you guys think?
For me, when thinking about the privacy on CBDC, there's no right answer for the central bank because we need to balance between the privacy and regulatory overseas. CBDC with full privacy probably is preferred for the most people, but and it helps protect user privacies. But having such privacies would raise concern regarding money laundering, right, and the tax evasion, etc. So the user ID must be verified to ensure the secure access. Moreover, the information on the CBDC transaction and payment could be benefit for the user to build their credit profile and more access financial services. And the central bank could also benefit from the data to make a better policy and more precisely. That's my view on that.
If I may add,
go ahead, Anki.
I think one point that I wanted to add is I would want us to make very clear the difference between privacy and anonymity, because they are different concepts. People talk about blockchain transactions being anonymous. The only thing that is actually anonymous is cash. Every other form of money exchange or money transfer preserve privacy at some level. And I'll let Malik take this. I think one thing that we've learned from mobile money regulation is tiered KYC has, given how much money you're trying to send or transact, higher the level of requirements for KYC is a pretty good point to start at. Sorry, Malik, go ahead.
Thank you, Anka. Actually, that was one of the points, it's a great segue and I was going to make that as well. But whether it is in terms of tiered KYC or risk-based authentication, I think Mushi spoke about, or you spoke about using this data for, and I think Sarun also spoke about it for lending in the, to kind of drive inclusion, especially where credit bureaus are not strong. So I want to just zoom out, Zing, and I think it's a question for all of us as people who are involved in this space, some of whom are thought leaders here, on this broader question, which is, or this, I won't say dichotomy, but two forces, contrasting forces at play when it comes to privacy in the broader sense of the term. And we are seeing this a lot, whether it is in terms of, the big techs in the US or what's happening in China, etc. All these antitrust kind of investigations or kind of actions. There is a growing realization amongst individuals about data sovereignty, and it's not just about privacy. I think it goes beyond privacy to data sovereignty. Who owns, whose data is it eventually? And it's not just a question about central bankers now. Central banks are, we are talking about them getting access to your transaction records now. Banks have been having it for decades. The Alipays of the world have had it for the last 10 years, and Facebook has it for 15 years. It wanted to do that with Libra. So whoever is the stakeholder, the fundamental question is, whose data is it? Who owns it? Who can use it? To what degree? So I would probably take it a step beyond what Anka said. It's not just about tiered KYC. It's about tiered use of your data, and do you as the individual have sovereignty over that data? And I know it's a topic we could in this group debate for another 15 minutes, but I stop here in the interest of time. It may be something for all of us to reflect on or continue this conversation. So CBDC design is one part of it, but in the broader sense of the term, if you have, in 10 years time, a proliferation of, along with payment wallets, identity wallets, and then it's only permission based. So even central banks or, the Alipays of the world or the Googles or the Facebooks of the world can access my data when I allow them to, then perhaps it's a design question, but it's a larger question that central banks, but also other parts of the regulatory landscape need to address and answer.
Adding to that, right? So when you're talking about central banks, these are the central bank of a country, right? The legal authorities who are in control of money that is there. So them knowing all details of your transactions is inherently built in, right? As a right that they have, either the tax authorities or the government has that right. And as Malik mentioned, through banks, they can already know that transactions or through any demand, right? Now, will the central bank want to know everything you do? You bought a chocolate, you went in, had lunch or a dinner. They're not really that concerned about it. What really comes in is they're probably looking at ideas about AML for illegal transactions, etc., that are taking place. And it starts with a layer of data analytics on top. They can monitor that better. That's one thing we can think about. While I'm just very quickly going to close on this, the key for me with privacy when it comes to CBDCs is going back to the very start, it's programmable money, right? And if you use the right consensus mechanism, even the regulators don't need to, or the central bank doesn't need to look at all the transactions, right? And they can be privacy maintained only when there is a certain crime that's considered or a red flag that is raised. So inherently bringing in data analytics and AI on top can then make that no need for you to have that issue when it comes to privacy issues. You can only be on a red flag basis.
I think we're coming to the end of our session, and I just want to make sure we include one question that came out from our audience. This just pertains to the area of stablecoin and how CBDCs, how you view that would impact stablecoin, because earlier we talked about trading, right? And we all know about how USDT and how it grew. So curious, as parting thoughts, do we have any thoughts on that? What do you think about the future of stablecoins in relation to CBDCs?
And
sorry, well, I may add one more, and even Bitcoin, that's something that people are interested in. Stablecoin, Bitcoin, final thoughts, and then we'll wrap this panel up.
So I think the stable coins that are tracking some of the world trade currencies like dollar, euro are here to probably stay for some period of time. If nothing else, then intermediaries, and bridges for CBDCs. Bitcoin is an asset, but Bitcoin is a crypto asset. It's here to stay for the long term. I don't think it's feasible as a payment currency. I don't think it has the future of money. That may be something that a lot of folks in the crypto world will disagree with, but yeah, I'm going to stand by it.
Yeah, I concur with Anka, actually. I mean, I feel like cryptocurrencies and CBDCs are actually responding to different realities. I know that some people in the crypto world, especially those who are more crypto enthusiasts, tend to think that cryptocurrencies may actually become like a currency and replace fiat currencies. But to me, based on what I'm seeing and based on how the whole global financial system works, I feel like cryptocurrencies are filling a different spot now, to put it this way. So we're talking about different realities, different concepts, different areas. CBDCs can coexist in the future, of course, with cryptocurrencies, but we may be seeing in countries like, for example, China, which are and will be adopting a tougher stance towards cryptos, for example, whilst promoting their CBDCs. And this is because we're talking about different concepts, different realities. Cryptocurrency is never going to be central bank money in the same way that central bank money never will intend to be a cryptocurrency and part of the DeFi system. So it's a different reality completely.
And to top on that, I think stablecoins are largely used for what, right? They are used to, in a sense, convert fiat currencies into an ecosystem which is only crypto, right? So a lot of exchanges don't accept fiat anymore because of multitude of reasons. However, I think that will peak in 2-3 years' time. But in 5 years' time, when there will be, already a lot of exchanges are getting regulated and there's a lot of activity that's happening, and if the FATF rules, etc., kick in, there may be that level where banks are comfortable to start transacting with cryptocurrency exchanges, both on the DeFi and the central exchanges perspective. So at that stage, the utility of stablecoins will have to change or will reduce dramatically, because by that time, you could have that interface between CBDCs and regular money with crypto, right? So that, I guess, is that inflection point, probably 3 to 5 years away, but you will see in the interim that you will see more stable coins beyond the USDT or USDC. Libra is going towards that. So we'll see how that progresses from a multi-stablecoin ecosystem.
Great. Thank you so much, panelists. This has been really helpful, and I thank you for your contributions. And yeah, I'll hand the mic over. And thank you for the organizers for organizing this, and to all the participants for dialing in and for your time. And I'll hand it on to Bowie to wrap up.
Thank you, Zing. Thank you, everybody, for joining this great panel discussion. I think that comes to the end of our event. And stay with us. If you know anyone who are part of the GIF, I'm one of them. Feel free to reach out to any of us if you're interested to become a member. So that's all. Any final words that you'd like to say, Malik, before we close this session?
No, just to thank you.
Sure. There will be many more to come. So thank you, everybody. Have a good one, everyone. Thank you for joining.
Great. Thanks, everyone. Thanks.
Cheers. Bye-bye.
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 Thank you. Bye.
Thank you.
Thank you. Bye-bye.
Thank you for organizing this. Thank you. Bye.
Absolutely. Bye-bye.